So guys, welcome to another recap of your S&P 500 Spider. Today we're going to be taking a look at the price action for today, as well as one trade that I've talked about for the past couple of days, and I want to go ahead and analyze that. And the trade is CCIV. But before we get started, let's go ahead and just review when they're happening today in the market. Today, we ended up seeing a big sell-off today. We ended up gapping up between these two channels. It was kind of a neutral day. I said if that we were able to, gap around here, and if we're able to gap above this 386 and touch this in the morning to go long. However, we did gap below it, so you're not going to go long. All of a sudden, you're going to go short on that level. So we take a look at when they're happening today. Is we opened up, right below it. You got the first fake out in the morning, and then as soon as that gave up, it came to test one more time. How you would trade this in this scenario is if you gap below, this is now your resistance, right? It's only going to be your support if you start closing bigger candles above this. And by bigger candles, I mean bigger time frame candles. So this is a 1 minute chart, right? You have to start closing 5, 15, and 1 hour candles for this to really be support. So the fact that it was only about 6:37, yeah, it was only about 7 minutes that it stayed above this channel. It means that this was actually a fake out. And that's how you ended up seeing the sell off all the way to the 384.74 support that I've had here for the past, couple days, maybe even weeks. So the way you would trade this is, we're looking at a bearish day. Um, so what you would do is, next time it comes into this level, take the short, right? Take the short. You can give it some risk. You can give it from about, above the high of the day around 386.82, maybe, 380, 386, 387. How about that? You do 90 cent, 90 cent risk, but you try to get at least $1 plus. So if it's 386.10, 3620, here 3674, that's about $1.50, right? It's about $1, almost $1.50. So you're risking about 90 cents, but you're looking to gain about $1.50, right? So what ended up happening is, since this was actually a fake out, this is still resistance, right? So you want to sell at resistance, you want to buy at support. So this was resistance, you short, and look, you get paid. You would try to cash out a little bit around the first level. When this went through, you know that this was still going to be support because it came to pull back, right? However, the fact that it got rejected from the support again, and after this third time, it pretty much just means that this is not going to be your resistance, right? So what you would do is, once it comes to test here a second time, you can take a short here, or you can really wait to, for the number to really run away. But pretty much you want to take, this play right here, because this right here was going to be, your pivot of the day. And look, if you would have gotten, here and then maybe stopped out when it got to, here, you could have gotten paid, see 383 from 386, about $3, right? And again, you're only risking about 90 cents. So it's a good ratio. It was resistance again, it came back. And one thing I tell you guys is that the more it comes to test the number, the less strong of resistance and support is going to be. And in fact, here it ended up breaking through, chop sideways, and then we started closing, more candles at this level. So it's no longer going to be as strong resistance or support. And so, it came back the second time. And this time you didn't get as strong of a sell off. One thing too is that you're going to notice that in the middle of the day, you're not going to get as large of a price swing as you will from here at 653 all the way here, at 659, because the majority of the volume in the trading day happens within the first about 30 minutes to an hour, and especially within the last hour. So, the rest of the day was pretty much just chopped sideways. In fact, you could probably take a short here and sell off right here. And, you would probably break even just because, you ended up expiring. You ended up wasting about 2 hours worth of time. So that data burn is gonna hurt you bad, right? But again, once this was given up, you saw some acceleration to the downside. It caught a bottom around here. And the rest of the day pretty much just chopped sideways, and we're closing around this 381 level that we have marked. However, this right here, your 380 sell-off pivot, as long as the market can stay above this, it's not a guaranteed sell-off. Once it starts going below this level, then you're going to get that strong sell off. And I just want to talk a little bit about this candle that was made right here, right? Some people are saying like, oh, it broke through. Why didn't the market sell off? Well, as I was saying, like you really have to start closing. You have to start closing those big candles below, below that price. So in fact, if you go ahead and take a look at for example, the hourly, this shows you, the hourly. It's a days divided by 1 hour. On this day that it broke through, you end up seeing, yeah, the candle did end up closing here, but the next candle actually ended up recovering. So that actually kind of negated the effect of, the sell off on that day. In fact, if you go ahead and look at the, 5-day, 15-minute, it only really lasted here for no more than about 15 minutes, because by the next 15-minute mark, it had already recovered above the 380 level. So I'm gonna go ahead and do it with another time frame so you guys can kind of see what I'm talking about. Actually, I don't have any more. Okay, we'll leave it at that. But the point being is that you really have to start closing, 5 minute, 15 minutes, then the hours, and then really the daily candles. That's what you want to look at. And since it was able to actually go up to here, sell off, and then actually recover, by the end of this hour, that was actually a very strong sign, because look, this candle started at 7:15. This candle started at 7:30, right? So around 7:15, it was above this level. By 7:30, by 7:45, it was already above this 380 sell-off pivot. So I'm just gonna go ahead and look at the trade I was talking about, CCIV. This was a trade that I called out on the Bros group. Let's go ahead and take a look a little longer. Yeah. So my first entry target was going to be around 27, which is actually this green line, 27.20. I put a range of 27.05 to 27.50, and the 27.50 was kind of just one of those numbers where just to get in the trade, so Bros wouldn't miss it. And what ended up happening is when I posted it, it had made, I believe it was either this candle or this candle, but you did see that, it went through, but it actually ended up bouncing away. However, one thing that's going to happen is, this market's been getting killed the last 2 days. So that's why you didn't see this follow through, up to the upside. And because of the fact that we've had 2 more red days, yesterday we ended up coming to test this, right? And today, since we had a really big red day, this wasn't able to hold. This was actually, going to sell off. And where did it sell off to? This green line is your 20 EMA. This one's your 50 moving average. I'm sorry, these are just the simple moving averages. It ended up actually closing at your 50 moving average, right? So what's going to happen next is that this is going to run down to your, if this fails to hold, it's going to run down to one of two levels, either the 100 moving average, which is sitting around 2090 at the moment, or this, this green line. And the bottom, and the reason why I ended up picking this level is because this level was the bottom before it had a massive leg up. So for example, I'm going to go ahead and annotate for you guys so you guys can understand. The stock came up, came sideways, came up, and it made one last touch, before it just pretty much took off, and the rest was pretty much history. So this level right here is the point at which there was no more, at which the buyers were able to beat the sellers, and from here on out, we haven't looked back on the price. So the way I would play this is try to get in maybe around, you can try buying this in a small position. And if tomorrow we have a green day, you can expect this to run up. And in fact, if it breaks through this green level, I can expect this to run up maybe to around, this level right here, right? And that's going to be around your 33 level. But it really all depends on your risk and your reward. So what I mean by that is if you're going to get in at 24, right? Let's say you want to risk at most, $5, but you're looking to sell at 35, right? So if you're looking to sell 35, you're going to win 11, right? So your risk to your reward is very favorable. But what I would do is maybe I would say, okay, you're going to do a third of your position at 24, and you're going to do 2/3 of your position at 20, right? And so what that's going to do is it's going to bring your cost average down to about 21, right? At that point, I would say, okay, look to get out around 18. So that'll be risking $3, but be looking to get out maybe around 33. So that would be about $12, and that would be a much more favorable reward, risk to reward, right? And that's just going to be for a swing. If you like the stock for the long term, then just go ahead and hold on to it. Just get into those entry points that I've provided, and you know, hold on to it for for a couple years, and it's for sure going to go back up. Now, again, this is just contingent on the fact that the S&P 500 does not sell off, because if tomorrow we get a day where we start closing below 380, this is not going to find a bounce. You're not going to find a bounce on a very red market, right? So like I said, it's going to go down to your 100 moving average, and then it's going to go down to this level. And if this level gets given up, you're going to be looking around these levels to try and catch a bounce. And then, if that breaks, and, at that point, you're waiting to see where the market makers are comfortable at putting the bottom in for you. And that's pretty much going to be it for today. If you have any questions, go ahead and leave a comment. And if not, then I'll see you guys in the next video.